Hello, and welcome to the first episode of the Market Snapshot series. My name is Rufas Kamau, Market Analyst at FX Pesa. So as you all know, this is something we are looking to start and keep it going for the year. So on this particular series, we're going to be covering quite a number of stuff. Most importantly is a market snapshot. And what we mean by these is what is currently happening in the markets. So it's a very short-term view of the markets, basically looking at what happened last week, yesterday, versus what we're expecting to be happening today. So in addition to these, we'll also be looking at the key price levels, and hopefully these get great value for you guys. So let's get it going. Once we join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So hello, Rashid. Thank you. Thank you for joining the session. So let's get this started. So from what you are seeing here, this is basically the chart of gold. You can see it was one of the most volatile assets of last week. So having broke down towards the lower side on the lower trend line, this happened on Thursday, followed by some further fall on Friday. And now you can see it started with a very strong momentum, making a strong recovery. So there's a good chance that we'll be seeing some further upside in this. There's a good chance we'll be seeing some further momentum in this recovery. So remember, since the beginning of the year, this is where the year started, gold has been majorly moving upwards, so a very strong upwards momentum. So last week, there's a couple of news that was happening. One, the Federal Reserve Bank of the US hiked interest rates by 25 basis points, and this moved the US interest rate to 4.75%. So at the same time, Bank of England did a 50 basis point hike, which pushed interest rates to 4%, whereas the European Central Bank or the ECB hiked by 50 basis points, which moved interest rates to 3%. So we're expecting some further commentary, the same this week. And the most important news for last week was the surprise job market data. So let's try and get a view of what happened in the job market. So we'll start with the calendar. So there's so many economic calendars out there. I prefer using Forex Factory. Has been quite resilient for the years. So let's start with last week. So as we approach the end of the week, on Friday, we had the US non-farm payrolls or the job market data. So the average hourly earnings in the US was rising by 0.3%, and this is still a big problem for the Federal Reserve Bank of the US. So remember, the Federal Reserve Bank of the US is facing a major problem, which is a high inflation. So it has been hiking rates aggressively to make sure that inflation is toning down. So one of the key indicators that the Federal Reserve Bank is following, one, the inflation data itself, which has been doing quite well for the last 6 months. It has also been following the housing market as well as the jobs market, and also the retail sales and economic data. So far, there was a lot of fears in January that the US is headed into a recession in early this year. But then, from what we are seeing from economic data, shows that the US economy is very resilient and very strong right now. And in that case, the Fed might be forced to be a little bit aggressive with rate hikes. And this would possibly mean a stronger dollar and weaker equities. However, as per now, the indication of a very strong US economy is leading a very strong growth in equities. So from last month, that is January, the US created 517,000 jobs. And this is way higher than expected, which is 193,000 jobs. So in December, we also had a big surprise where the US created 260K jobs, and the expectation was 200K jobs. So this was a big move for the US and boosted a lot of confidence in the US. So that's why we saw the equities flying higher. So same case applies to unemployment rate. So the unemployment rate moved from 3.5% to 3.4%, meaning that there's more and more Americans are working, which basically strengthens the economy and also improves the consumer purchasing power. So the expectation is that the job market would worsen 3.6%. So this also was a big surprise. So now, when you compare this information, what happened on Friday, then you notice, for instance, the Euro USD down as there was a very strong strength and optimism in the dollar. Gold shot down as well as over the assets. So also equities happen to be reversing a little bit. So for equities, main reason that we were associating this challenge is as a result of the expectation that the Fed will have to tighten further in order to stall down or slow down the wage growth. So having that in mind, there's a lot of stuff that you're expecting this week. However, as mentioned, this is a market snapshot series. We will be doing this every day from Monday to Thursday. And on these sessions, we'll be covering the information for today as well as yesterday. So today being Monday, moment, let's click here, but today. So this is what we are focusing on in the economic calendar. So first things first, it's a bank holiday in New Zealand. So we expect a slow momentum, slow activity from the people and organizations operating in New Zealand. So MI inflation gauge in Australia came in at 0.9%, which is 0.2% higher than the previous reading. So retail sales indicating consumer power or consumer purchasing power. This was a negative 3.9% as expected, which is the same as the previous month. Then in the Eurozone, we had the Germany factory orders month-over-month. This came in stronger at 3.2% compared to a slowdown of negative 4.4% the previous month. So this indicating some strength in factory orders or some optimism that there will be higher production in the next 1 month. Then we'll be having a speech at 11:40, and this is from the MPC member man affecting the UK. So remember, this particular speech will be sharing insights about the rate hike that happened last week, moving interest rates from 3.5% to 4%. So this has the potential to create volatility in UK pound pairs. Then Centix investor confidence. This is a very strong survey. There's a good chance if it comes stronger than expected or weaker than expected, it could move the European pairs. Then you'll have construction PMI later at 12:30 p.m. So notice all these are labeled in yellow, indicating that we are expecting some medium impact in the markets. Then we'll be having retail sales affecting the Eurozone at 1 p.m. So retail sales data is a very strong data indicating the strength of the consumer. So when investors are focusing on this data, they want to wage or gateway to make sure that the European consumer is strong. If the European consumer is strong, then you expect the equities to be doing well. You expect companies to be making more sales. On the other hand, if the retail sales are slow, then it happens to be very negative for equities. So as we approach the end of the day at 6 p.m., we'll be expecting the IVA PMI or the Purchasing Managers Index in Canada. So this is a very strong measure. So it's basically a level of diffusion index based on surveying Purchasing Managers Index. So it's private. It's from the Richard Ivey School of Business. So once we look at this, then we'll be looking at less data towards the end of the day. So MPC member, Bill, will also be speaking. So notice we have two Monetary Policy Committee members issuing a speech today affecting the UK pound, one at 11:40 a.m. and the other one at 8 p.m. So whenever you have these speeches, especially right after an interest rate hike week, then there could be commentary that could influence the markets. So the most high impact news that we might see today would be 1, European retail sales, 2, IVA PMI, 3, the speeches from the Monetary Policy Committee members of the UK. So besides that, we don't have much happening. So the next piece of information will be tomorrow very early in the morning before we hold this particular series. It will be affecting the Australian dollar. So we'll be looking at the interest rate data from Australia. So we expect a slight hike of 25 basis points from 3.1% to 3.35%. followed by an RBA rate statement. So that's all we're expecting for the day. Now, when we look at the charts, I don't think there's much going on. So it might make sense to trade based on technicals. So we look at the technical levels of the market. For instance, we already have a key technical level playing out, Brent oil, and all see that those are overextended level prices consistently pushing down, which seem to be a reversal. The previous trend where the market was going up, so there was a break of this particular trend line on the 4-hour chart. And now what we are seeing is the market attempting to go back, which can be a very common theme that once a market happens to break a trend line, it may go back to test the same trend line. So we might see the market pick back up, retest this area here, and the price level is about $82. So we could be seeing Brent oil trade back to $82 or even 81.9. Then once it gets here, then we'll observe and see whether it's a great reversal or just a retest and then further downwards. So on 1-hour chart, this is how it looks like. So we still have some support levels here, slightly broken on Friday towards the end of the day. Then this morning seems to be quite bullish. So there's a possibility that we'll be seeing a stronger activity happening later in the day. So thank you very much, guys. Thank you for your time. We'll be looking to do this every day, Monday to Thursday. So remember, this is not investment advice. This is purely educational, and I hope you enjoy the rest of your day. So there's a very good question before we end. Whenever we look at the data from the calendar, do we compare the actual to the prediction or actual to the previous? So we always compare the data, the expectation, but also it's also very important to compare the current data with the previous. So looking at the difference between actual data and the previous, then you can see the margin of shift from one data point to another, which gives you an information whether there is a strong growth, weakness, maintained pace. Then when you compare with the expectation, you're trying to estimate the impact whenever there is a key difference. So for instance, if you're expecting the Reserve Bank of Australia to hike rates by 25 basis points, and then it does 50, then that expectation versus outcome is more significant than the previous versus the current data. So thank you for the question. I hope you guys enjoyed the session. Let's meet tomorrow for the same.